Well, so obviously Tesla beat massively yesterday. We talked a lot about earnings catalysts and the beat for Tesla yesterday, but we need to break down the revisions from Goldman Sachs. How nice, Goldman Sachs, that right before deliveries, you all downgrade your outlook for Tesla. So you get a Goldman downgrade right before the deliveries, and you actually cut your expectations for the stock, and you cut your expectation for the price of Tesla. And then as soon as the deliveries come out with a big beat, you happen to say, you know what, we're actually now going to raise our price target from 248 to now 275. It's almost like they're constantly chasing the market, trying to do what the market is actually doing with stocks and how the market is reacting. Now, we don't only want to talk about this Goldman piece here. We'll briefly go through this, but I want to talk about BYD after this. And so we'll get into BYD in just a moment. But first, let's just take a look at some of the commentary that Goldman here provides on Tesla as to why they're increasing their price target for Tesla. Tesla delivered about 466 vehicles and produced 480K vehicles. The preliminary these numbers rather were significantly above the visible alpha consensus data at 450, Bloomberg consensus at 448, and Goldman Sachs estimates at 445. Model 3 and Y deliveries in the quarter were up about 8% quarter on quarter and 87% year over year. Keep in mind, that is comparing to the whole of 2022 when Shanghai was oopsie doopsies. And so implications and analysis. We consider this to be a strong report as volumes came in well ahead of consensus and Goldman estimates. We had expected less of an increase in June vehicle deliveries compared to past quarters because Tesla has been in the process of transitioning to a more even delivery schedule throughout the quarter in order to ease logistics issues, right? If you have a big run, a big ramp at the end of a quarter, you start running out of ships and trains and freight cars to transport your cars. But the report suggests that Tesla was able to close the quarter more strongly than we in the consensus had expected. We believe Tesla could provide directional color on regional demand trends when it reports results. That would be on June 19th. We'll be getting Tesla earnings. So, of course, we'll be covering those. And then what is interesting is there is some talk circulating now that Tesla is considering cutting potentially prices, at least in the U.S. and Canada, or potentially have already cut prices just here at the beginning of July, which some argue could be a way of continuing to facilitate this balanced sales push. Especially since they just had an end of the first half, so big sales push, and now create another reason to get people into the store with another price cut. Though a lot of folks were like, wait, I thought Tesla was going to be done with price cuts. So maybe we haven't quite hit the bottom yet for Tesla price cuts in terms of vehicle cuts, but it certainly feels like we're getting closer. Anyway, looking at Goldman here, we believe Tesla could provide directional color, right? We talked about that. We expect investor focus heading into the next earnings report to be on gross margins. That's what we talked about yesterday as well. Gross margin is going to be the top one. But personally, in my opinion, the two to really focus on are going to be cash flow and the potential for a money raise. A lot of expenses going in over at Tesla. Let's look at some of the estimates that they have over here. So these are the estimates for the balance sheet. They actually see Tesla's balance sheet rising very, very strongly here into throughout the rest of 2023, sitting around that 21 bill level where we are now. But by 2024, getting to about $33 billion in cash and potentially as much as $53 billion in cash and cash equivalents by 2025. This is sort of your Goldman forecast right here. And then as far as cash flow from operations, they think will be positive substantially still throughout 2023. That's why I think you have a negative catalyst here, because this is the tightest right here. If you actually look, it's much larger for 2024. In other words, the gap between CapEx and cash flow from operations, much larger in 2024, much larger in 2025. I mean, here you've got about a $12, $13 billion difference. Here you've got about a $20 billion difference. You only have a difference right here of roughly $5.5-ish billion. So you're getting pretty tight over here in terms of that cash flow. That's why I think the money raise is possible. Anyway, in terms of earnings per share, Goldman Sachs looks like they're revising some of their... yeah, they actually are. Their last earnings per share was below, for their non-diluted, was below $3. And they've actually bumped that to about $3.24. Wall Street consensus right now is around $3.50 for 2023. And with this deliveries beat, we might actually end up beating $3.50 in EPS for the year, which would be great for the stock. But you could absolutely see a strong growth here of earnings forecasts. If you look at just EPS growth alone, which goes into our PEG ratio calculation, if you go 469 divided by 324, you're looking at about a 44.7% EPS growth rate. 6.2 divided by 4.69 puts you at about a 32% EPS growth rate. I've been using around 30% for EPS growth, so this is great. This is very good. Yeah, so I like to see this from Goldman Sachs. These revisions up and these again, potentially a red flag right here, an Achilles heel that Wall Street doesn't seem to be paying attention to, a potential negative for free cash flow. We'll see. But this is a revision up here. Again, I think you get a lot of these companies. They just revise their price targets up as the stock's going up, which is just ludicrous. Anyway, then we got to talk about BYD and its relation to Tesla over here, because BYD also reported some pretty phenomenal numbers. Before I do that, I just want to be very clear, because there's like this constant confusion in the just stock community, and it like people legit do not understand what the word annualize means. They literally think you have to compound. You do not compound. Annualize does not mean compound. So what I mean by that is if you look at Q1 and you compare that to Q2, you get 10% growth. That is the speed at which growth is going right now. If somebody said, oh, Tesla's growing every quarter at 10%, then you compound. Then you have to use exponents to calculate how much the company is going to grow by the year. But if somebody wants to annualize, if we maintain that speed, how much is the company going to grow? The answer is very simple. It's 40%. You just multiply by 4. That's what it means to annualize. That's why the words are different. Annualize, multiply. Compound, exponents. It's very simple. But apparently, people in the comments just can't get it through their heads. And I think I've made this argument like 1.5 million times, and it's extremely exhausting. But I hope if you're watching this, you realize there's a huge difference between annualizing and compounding. Annualize, you just multiply. You're just looking at a snapshot of growth. The reason for this can be very simply understood to say that, look, if in Q1 you had $100 of sales, and in Q2 you have $110 of sales, you are growing at that line. Compounded growth implies an exponential curve, but we have no data to suggest that we're able to imply an exponential curve. All we have is we went up 10% from Q1 to Q2. That doesn't mean we're going to compound again from Q2 to Q3. It's just that pace. That's the pace we're growing at. Anyway, compounding implies growth where you shouldn't imply growth. And if you compound, you are probably over-evaluating growth. Now, that doesn't mean the company's not going to outperform, but it's just not what annualizing means. Anyway, rant on that over. Now, let's get into some of these BYD numbers here. So, Chinese EV maker BYD reported another impressive growth month here. Now, they sold almost twice as many electric vehicles as they did last year, and a lot of folks are using this as an argument to suggest, BYD is way ahead of Tesla. Keep in mind that when you analyze BYD, this is a company that, first of all, is selling battery electric vehicles, that is pure electric vehicles, but they're also selling hybrids. They're selling a lot of hybrids. This is something to consider. So, for example, if we break down some of the actual numbers here, what you can find here is The total number of vehicles sold here, which includes plug-ins and battery electric vehicles. This is on a monthly basis. This shows you returning to growth at BYD. Still obviously very good, but do keep in mind that BYD sells vehicles that are substantially less expensive than Tesla. So it makes sense that growth rates might appear somewhat higher at BYD. A lot of folks question, like, hey, well, if BYD is growing so much, isn't that bad for Tesla? They're two totally different markets. Cheaper hybrids on one hand, some smaller battery electric vehicles, and more expensive vehicles over with Tesla. Something to keep in mind. And so, as you can see here, Barron's breaks that down. Look at that. BYD's 90% is faster than Tesla's 70%, but Tesla makes more expensive vehicles. It's easier to sell less expensive cars. And then, of course, you have, pure electric vehicles versus the hybrids. And we can actually break apart those numbers. So BYD in the last quarter here, there we go, they sold 251,000 vehicles in just June, which is pretty good. It's somewhat close to about half as many vehicles as Tesla sold. But if we break that down into hybrids and non-hybrids, they actually sold 128,000. What do we have here? This is in June. Okay, this is just the June number. So for June, 128,000 vehicles, just EV, and then they sold 123,000 hybrids. So you're almost at a 50-50 change there. Last year, or split between the two, last year they sold about 911,000 pure electric vehicles, which works out to about 76,000 per month on average for 2022, which then we can multiply or divide rather and find out their growth rate. And you can see that is a very impressive pure electric vehicle growth rate of 68%. So no shade off BYD. I will say BYD's numbers are pretty good. You've got a company that's actually selling a lot more vehicles. Again, cheaper vehicles. The margins are nowhere near as fantastic as what you have at Tesla. But then again, margins are also under pressure at both ends, both discounting. BYD does have a dealer relationship, so you do tend to get dealer discounts rather than headline discounts like you do at Tesla. Something very important, by the way. A lot of people forget about that, whether by accident or whatever. But it's important to consider that when Tesla sells directly, their price decreases or modifications are very, very transparent. Whereas when you are working with a dealer model, price changes are very arcane. You're just getting more of a discount conveniently off of MSRP or otherwise. So something to keep in mind when it comes to the dealership model. Now, when it comes to the financials for BYD, the company's very robust. Obviously, Warren Buffett is somebody who's a big fan of investing in BYD, though we've seen him reduce some of his stake in BYD. People still refer to the company as Buffett-backed. But anyway, their gross profit margin sits somewhere around 17%, which Tesla's kind of starting to knock on the door of that direction. BYD's gross profit margin in 2019 was 14.8, went up to 17.8, down to 13 during the pandemic, 17, 17.9. It's really stable, somewhere around 17 to 17.5. Tesla just hit a low of just a little over 19%. This next earnings report will really tell you how much of a difference there is between Tesla and BYD. If BYD is still at 17% and Tesla falls to 16% or 17%, well, then BYD is doing pretty dang well, right? However, BYD on net brings about 4.1% to the bottom line. And this compares to Tesla, again, with about 19% on gross. But Tesla brings almost 3 times as much to the bottom line, between 11 to 13% coming to the bottom line, compared to BYD at only about 4%. So even though gross margin is getting closer, 17 at BYD, 19-ish at Tesla, that net bottom line number is still 11 to 12 to 13% at Tesla. You're only at 4% at BYD. So do consider that in your evaluation of the comparison of the companies. Both of them are expected to grow quite well. Earnings are expected to grow at over 30% for Tesla for probably the next 5 years going forward, which is fantastic. It's something to keep in mind. BYD is also expecting to grow earnings in excess of 30%. Some are arguing that their growth could actually be a little bit higher than Tesla's because they sell so many hybrids at maybe closer to 35%. So something to keep in mind for the difference between BYD and Tesla. But look, don't get me wrong, it's always going to be competition, and that's just the nature of the beast. But both of them are doing well, and I quite frankly think both can continue to do well. Barron's talks about how a price war broke out between EVs and petrol vehicles in China, and that heavy discounts are really trying to spur the Chinese consumer to buy. It's another problem potentially facing mainland China is BYD's trying to get out of China because they realize Chinese consumers slowing down. When I say out of China, I mean they're trying to expand outside of China to also sell to like the European markets. It would be very interesting to see BYD cars in America, but we shall see. Now, when I started this segment, somebody had asked this morning a question that I wanted to get back to. They say, do you think Tesla's price spike will be temporary and bad margins and a potential raise and an Elon selling tweet will affect the stock? So Elon didn't suggest selling. I actually think his tweet was reverse psychology. I think his tweet of, hey, avoid margin, is a bearish tweet. But imagine if we got bearish numbers. That would be horrible. The SEC would probably complain that he's providing insider information and there'd be lawsuits again. He did the opposite, I think on purpose, because he knew what the numbers were, so gave a bearish tweet to purposely just mess with people who want to believe that, he's trying to insider trade or whatever. He literally did the opposite here. But as far as the margins problem, margin and raise are going to be an issue. I think the stronger of a hold Tesla has on pricing today, stock pricing today, will be very good going to earnings. Because take a look, for example, at the TA for Tesla. What you really want is you want to solidify this 268 Fibonacci. Today we're going to solidify that. I don't think we're going to make it to, basically your 300 level, which is about your 295, 296. I don't think we're going to make it to that level, but I think what you want is confirmation that we're going to stay above 258. Any excess above 258, I think you could give up at earnings, but the goal is that you don't break through 258 after earnings again. The goal is that you stay in this range right here. And if you stay in this range after earnings and after that earnings negative catalyst goes away, especially if the earnings catalyst isn't that bad, I think there's a chance you could end up breaking over 300 after earnings. If it happens before, you could slip right back after earnings. But the more it goes up before earnings, the better. Because you're just creating more insulation for yourself. So a little bit of my thoughts here on Goldman Sachs, BYD, and pricing for Tesla. I do not think that you're at anywhere near the levels yet on Tesla where you would argue, it's time to fully dump Tesla or whatever. I think really that time will come in the future, but I don't think that time is now yet. Obviously not personalized financial advice here. I don't know your situation, but that's just market commentary. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced